Welcome to your essential guide to mastering the commercial invoice under a letter of credit. This is crucial for securing your international payments. Imagine shipping valuable goods across the ocean, but your payment depends entirely on a stack of papers. For newcomers, these documents can feel like a secret code. The problem is that a letter of credit, or LC, only guarantees payment if the paperwork is perfect. The most common reason banks refuse to pay is a discrepancy in the commercial invoice. Many beginners assume the invoice doesn't matter much if the goods were shipped correctly. But under complex banking rules, known as UCP 600, precision is everything. We will simplify these rules. This guide pulls back the curtain on the commercial invoice, the document that acts as your primary demand for payment. By the end, you will know exactly who must issue the invoice, how to describe your goods, and avoid payment delays. To master this essential document, we will navigate 4 core themes. First, the cast of characters. Second, the mirror image rule. Third, the money trail. And finally, the format traps. Let's start with the cast of characters. Who issues the invoice and who receives it? In a standard deal, it's a bill from seller to buyer. Under an LC, the bank checks strictly against the credit instructions. The invoice must appear to have been issued by the beneficiary, which is the seller. The receiver is equally critical. The invoice must be made out to the applicant, who is the buyer. The bank will reject it if it's addressed to the bank or a third party. For instance, if the LC names the seller as United Manufacturer Limited and the invoice says United Manufacturer, banks usually accept it because the identity is still clear. Next is the most critical rule and the most common trap, the mirror image rule. The description of the goods in the commercial invoice must precisely correspond with the description in the letter of credit. For the invoice, general descriptions are not acceptable. It must be a mirror reflection. If an LC asks for tubes and your invoice lists pipes, the bank will reject it. In their eyes, pipes do not necessarily equal tubes. Extra details are fine, but they cannot contradict the LC. Let's move on to the financial side, the money trail, covering currency and amounts. The invoice must be made out in the exact same currency as the letter of credit. You cannot switch from US dollars to euros, even if the math is correct. Because it's hard to ship exact amounts, if the LC uses about or approximately, you get a 10% tolerance. Even without about, you generally have a 5% tolerance in quantity. Crucially, the total value of your invoice typically cannot exceed the value of the credit, as this is the bank's maximum payment obligation. Remember, banks are not required to check detailed mathematical calculations on complex invoices. They only check the total value against the credit limit. Finally, let's cover the format traps, things beginners often overcomplicate. Contrary to common expectation, a commercial invoice need not be signed under UCP 600 rules. A plain printed invoice is valid unless the LC specifically asks for a signed invoice. A major pitfall is the title. If the LC asks for a commercial invoice, you cannot present a provisional invoice. Banks treat these as different documents and will reject them. Be careful of hidden costs. If your invoice lists a separate handling charge that wasn't included in the original credit, the bank will reject it as a discrepancy. Mastering the commercial invoice is all about precision and following a strict checklist. The most important takeaways are: the invoice must be from the beneficiary to the applicant. The goods description must mirror the LC exactly, and signatures are not required unless specifically requested. Remember, banks look only at the documents, not the actual goods. Treat the invoice as a strict checklist to keep that gateway to payment open. Thanks for watching. If this breakdown was helpful, please like the video and subscribe for more content on international trade documentation.